virtual round of applause. Yeah, so not the first time I've done this, and not the last, I'm sure. COVID has done a lot of things to make us rethink what we do, and I'm thankful for organizations like this one that have kind of stepped into the gap and still wanted to be a resource to business owners and to just their members. So it's great to be here for sure. So today we're going to talk about incorporating your business, and so that was a great intro. But just a little bit about MNP. So MNP is a national accounting firm with offices across the country, really focused on small and medium businesses, or SMEs. And so it's organizations like this one, it's businesses like yours that really are our clients from coast to coast. Been around for over 60 years, and just really focus on our community involvement, as well as helping local and regional businesses to maximize their organizational value and just to kind of achieve the goals that they have set out. So in terms of an agenda for today, these are kind of the four key points or key slides that we're going to go over. So just, should I incorporate? What does incorporation mean? What is corporate services, which is a service line that MNP offers that I help to lead for the firm. How does it work? How does incorporation work? How does corporate services work? Kind of some nuances around what you need to know. And then I just want to walk you through some case studies. Really, what I found for myself personally and working with other leaders is that sometimes the easiest way to learn is to kind of do so through stories. And so I have a couple of examples here just to kind of provide you with some real world examples that would help you to kind of slot yourself into where you might be or what makes sense for you. And then we'll have some Q&A at the end. So again, as you have questions, feel free to just type them into the box, and then we will answer them at the end. So firstly is, should I incorporate? So really, if you go back to kind of, if you took a law class in high school or in college or university, they kind of taught this. I remember taking it in basic law. It's the three types of a business, right? So you have your corporation, you have a sole proprietorship, or you have a partnership. Each of them have their own values or their kind of places within the economy. Generally, when you think of a corporation, you think of large companies like Coca-Cola or Royal Bank. When you think of a sole proprietorship, you think of a small one-person shop. Often, a broker or a real estate agent, a really small business that someone just with one person, maybe one or two staff, that kind of thing. And then a partnership, a lot of times we think about it as like a law firm or accounting firm or some sort of joint venture, like in real estate, where you'd see a partnership. So those are kind of your broad strokes. There's everywhere in between that, but that's a lot of times when we think of those three things, that's what we think about. As it fits from a more pragmatic or practical standpoint, a corporation really is just any company, whether you have a lot of staff or no staff at all, that you want to use what's called the corporate veil to give you some additional benefits, whether it's creditor proofing, whether it's tax planning, whether it's estate planning for your family, or whether it's having multiple shareholders. Those are the key benefits of a corporation, where a sole proprietor is just usually one person. It's very simple. And even from a tax filing perspective, all of the revenue goes on your personal tax return. And a partnership is much more complicated. So we won't really talk about that today, but that's kind of a hybrid between the two of them. So kind of focusing on a corporation is what we're going to do today. And that's when we want to talk about what we as MNP or law firms, I see the question that's there, a law firm setting up a company. This would be kind of what most of you are familiar with. So a corporation really acts as I said, that bridge. So it's a structure, it's an organization. If you actually look it up legally, it's an actual entity, a legal person. So you would incorporate a business and you would have shareholders, directors, and officers. And those three groups of people all have their roles within the company or the corporation, and they would conduct business. And so one of the key reasons why someone would want to use a corporation would be again, to create that structure that they're going into business with another person or another group of people, and they want that formal structure so that they can have shareholders and a shareholders agreement, and they can have directors that have their privileges and responsibilities, and officers and staff, and it flows a lot easier. Now, a negative to that is it is more complicated, so therefore it's more costly. It costs, think about $50 to set up a sole proprietor. You just basically register the name, and that's about it. And then it would just go on your personal tax return. Whereas a corporation, you're usually going to pay between $1,500 and $2,500 to set up the corporation, whether it's by using MNP or a lawyer. And then there's annual filing requirements. So in addition to just doing your normal personal tax return, you would have to file a tax return for the corporation. And so there would be costs, depending on the size and the complexity of it. Those costs would range from kind of $2,000 to $2,500 up to hundreds and hundreds of thousands of dollars a year for large corporations. So from an overall perspective, that's what a corporation is. And then you get into the upkeep of the corporation. So as I said, there's tax filings, but then there's also legal requirements that you have to keep up the minutes and the records of the corporation. So there's a range of records that need to be kept up, to when you have a shareholders meeting, to the various resolutions that would be set out of appointing a director or different things like that. Usually in a new business, in a simple business, there's just the basic annual resolutions that would go into the corporate minute book. And again, MNP offers that as a service line that I'll get into later on. Or a lawyer can do that, but that would need to be done every single year to keep the minute book up to date. The big thing for MNP is we do those that basic kind of record keeping for our clients, because what we found is that sometimes going to a lawyer, it can become more complicated, because then they need to work with their accountant as well. And so we've rolled that service line out for ourselves 2 years ago in order to streamline that kind of simple, basic record keeping minute book maintenance. It's not legal advice. It's just more of just kind of that basic administration. So from our perspective, and this is just a quick flyover for what we do, and this would be similar to what a law firm would do as well to keep it up, is they would either use a legal online platform like we do, where your minute book would be digital, or they would just store a physical minute book for you, and they would keep that up every year. And I'm just going to address that question now because it kind of fits. So Oliver asked basically the difference between incorporating yourself or using like MNP or a lawyer to do it. It's obviously the cost would be half. And so this slide right here really answers that question. If you incorporate yourself, you don't get a minute book. So what they're doing is they're just setting up a corporation for you. And so that's fine until it's one of those things where it's fine until it's not fine. When you need to go and do resolutions, if you ever want to sell the corporation, if you're looking for other shareholders or any sort of update to directors, anything at all that you'd want to do with the corporation, you would then have to pay to have a minute book created. And you would find that the costs that you saved by using an online service were quickly negated by paying someone to do that work later. So I would say that if you wanted to have a very basic corporation and never do anything with it, and it just kind of sit on the shelf and have a bank account and that's about it, those online providers are great. But generally speaking, if you're looking at operating a business out of it with staff and some additional complexity, you should engage a professional to do that. And that's why we use this platform is, when you go to get a new bank account, for example, for the business, they're going to need your articles of incorporation. And so this platform would have all of those documents readily available for you to kind of pull down and then send to the banker, send to, a partner, whoever that you would need. So from a case studies perspective, so this is the first one. So this was a client that I had a long time ago, or they're still my client, but I've had them for a long time. And they were a new business owner. The client was looking to start a business, and they had met MNP through some tax work that we had done. And then the client works with our corporate services team to set up a new corporation. And then our accounting team works with them on an ongoing basis. So this is kind of what I just walked through originally. It's just someone looking to start a business. So I have an idea. I'm buying a business that I need a corporation for. I want to, incorporate to be a consultant, those types of kind of basic, I'm new to the business world and I need a corporation. And so we kind of meet with them. We help them set up a corporation, get them started with bank accounts and credit cards and everything that you would need to kind of get started, and then help them with their annual maintenance and taxes, and both corporate and personally. And so that's kind of like your run of the mill. I'm just starting out and I need to get going. And then case study number 2. So this is a more complex one. So this is a multi-generational commercial cleaning client that I have. It's a father and son that work together in the business. They do around $6 million in sales. They already obviously have a corporation, and it's owned by a holdco, and the holdco is owned by a family trust. And so both corporations haven't really been updated for a while. And so that needs to be updated. And the client is interested in selling their business to the son for 5 years. So this is an example. We see this all the time. It's basically, I have a corporation, but the minute book hasn't been updated. I have a bunch of, I have a family trust and a holdco. Maybe that hasn't been updated, but now I want to complete a transaction. And so, we would help this person get all of that work updated, but by waiting until they needed to update it, it probably costs them 2 to 3 times more money than if they were to update that every single year, because it's like anything. If you have if you do your annual maintenance on your plumbing versus wait 10 years and there's a problem, it's probably exponentially more expensive to fix the problem than it is to just keep up with the maintenance. And so, in terms of overall just minute book maintenance, we view it the same way. There's obviously a legal requirement, but we obviously view it the same way as you would take care of your house. It's just making sure that things are in order and where things are going. In terms of this client, I'm just seeing this question now. The answer is yes. Yeah. So we set up all this structure. So this was an example. We didn't incorporate the original company, but the son wanted to come into the business. So we incorporated the holding company, set up the family trust, and did all of that tax work. And then at the same time, we caught up the operating company's minutes that hadn't been updated in a long time. And then now they want to sell to, the son wants to buy the rest of the business, but obviously we're keeping those minutes updated, knowing that 5 years from now, when he buys it, those minutes would need to be updated anyway. And so we're updating that as a part of our kind of normal annual go-to process. And that's it as far as a formal presentation. I think when I've done this before, most of the value comes in having conversations and questions at the end. So I just want to open it up to the floor for more questions.
Great, thanks, Matt. I see there's another question in the chat. Do you also interface with financial planners to make sure our overall plan is on track?
For sure. Yeah, for sure. Yeah. So we work with financial planners, with lawyers, with bankers every day, all day. So for example, in that case study number 2, that gentleman, he had an investment advisor that was also his financial planner. And so as a part of the estate of his son buying in, we were working with the financial planner for what that would mean for his estate, and obviously tax planning that the best that we could. Next up, can you talk about Section 85 rollovers? I could talk about Section 85 rollovers all day. So a Section 85 rollover is basically where you roll the assets into a corporation on a tax-free, tax-deferred basis. Comes from Section 85 of the Tax Act. That's why it's called that. And so a Section 85 rollover is used specifically when you would be a sole proprietor, let's say, and you would have a business. Let's say I'll make up an example. Like if I had a business and I was selling newspapers, and I was doing $400,000 a year because I was very good at selling newspapers. And so if I was selling them as a sole proprietor and I had a logo and I had maybe 1 or 2 staff people working for me, but I wanted to be a corporation, I would use a Section 85 rollover to basically roll the assets of my sole proprietorship into a corporation. And so we do all that work. I do that stuff all the time. And we could totally help you with that if that's what you need. Here they come. Usually it's one person asks and then everybody asks. That's good. When does it make sense to switch from a sole proprietor to a corporation? Good question. So generally speaking, there's 2 main reasons why someone would make the jump. The first is size. So I would say that usually you can sign a dollar amount to it. It's really specific to who you are. But using I'll use a real estate, or so real estate agents were just able to incorporate last year. So I'll use that as an example. If you were a real estate agent making $100,000 a year, it doesn't really make sense to incorporate because you could do your taxes for $800 versus the corporate taxes and personal taxes together would be, let's say, $3,000. So that $2,200 of increased compliance cost there's not enough tax savings in being incorporated and using dividends or tax deferral. So it doesn't really make sense from a savings perspective to the additional cost. And so what I always say to clients is, if you're that single shingle consultant on your own, usually $150,000 of net income to you after your expenses is really where it starts to make sense. Again, just kind of generally speaking. The second reason though would be creditor protection. So obviously, if you're in a business where it's more litigious, anything in construction, anything where you're dealing with kind of safety or where there could be claims against you, the reason to incorporate would be that you yourself and your assets personally would be protected from those liabilities corporately. So in that sense, there would be no dollar amount because you're using the corporation to protect you. So it would make sense no matter what. Next question, when should a corporation have a holding company? Again, that's a really specific question, Betty, and to your specific kind of situation. I would just say, if you are making a lot of money in your corporation that you're leaving in your corporation, it makes sense to have a holding company because you don't want the money that would be sitting in your operating company to be open to potential claims. So for example, if I went and incorporated my paper business and I had $300,000 of cash sitting in my paper business, and then I threw a paper at someone's house and it knocked the house over, they sued my my paper company, they would have that $300,000 accessible to them to come after. Whereas if I dividended it up into my holding company and held the $300,000 in my holding company, then that lawsuit would stop at the paper company. So that's the liability perspective. Again, from a dollars perspective, holding companies in relation to operating companies are used to build long-term wealth. So the idea would be that if you're making a lot of profits in your operating company that you're not spending personally, it's more advantageous to build up retained earnings in your holdco. Again, I'd have to understand a little bit more specifically, and my contact information is at the end if you wanted to chat more. Next up, if you incorporate a sole proprietorship, could the expenses you use from the personal funds prior to incorporating be used to deduct against personal taxable income? Yes, I think I understand that question. If you incorporate expenses you use. The expenses that you would use to set up the corporation would be deductible in the corporation, but anything that you had as an expense before you incorporated for the business, you would deduct against your sole proprietor income. So there's a date that you would pick where, let's say it's November the 1st is the first date of the corporation activity, and October 31st is the last date of the sole proprietorship. So you would have a break point from an expense and a revenue perspective. I think that might answer your question, but if I didn't, just ask it again. How do I set up an LLC in Ontario? We don't do that. That's a very specific product. So you'd have to talk to your lawyer about that. I'm not super familiar with setting up LLCs. I know that it can be done, but I've never done it. So it's not really my jam. How do I choose a year end for a corp? You can pick whatever one you want. It just has to be within the first 12 months of the company. So generally speaking, we always pick the month that you incorporate because it's just easiest. But if you incorporated today, you could pick a December year end. You would just have to file a tax return for that 2 months from today till December 31st. And then it would be December. But generally, you just would pick the month that you were in. But for example, if you incorporated today and you wanted a June 30th year end, then your first year would be today to June 30th. So it would just be a shorter year, but you can pick whatever one you want. Should I open an HST account now or after you incorporate? Definitely now. You can't open up an HST account before you incorporate. If you opened up an HST account now, it would be for a sole proprietorship. You need the corporation number and information in order to set up an HST account properly. So 100% after. What goes into the minute book each year? That would really depend on what you are doing. There's a whole list of resolutions that, depending on what's going on in the year, generally speaking, it would just be the annual return and the basic shareholder resolutions that have to go in each year. But again, if you appointed a director, if you issued more shares, there would be more and more depending on the activity. Last one, should I register federal or provincial? Pros and cons of both. Good question. So a federal corporation, the only reason why you would need to have a federal corporation, and it's more expensive to set one up, so I might have just saved you a couple $100, is if you plan on having offices in other provinces, not doing business in other provinces. So for example, if you are an Ontario business with an office in Ontario and you want to sell to someone in Alberta, you only need an Ontario corporation. If you are an Ontario business and you want to have an office in Alberta, you would need to be a federal corporation. So it's only about where you would have physical residence for your business, not about where you're conducting business for federal or provincial. It was like lightning round.
Matt, there are 3 other questions in the chat as well.
Okay.
The first one, I'm not sure what this is referring to, but it's asking, is that the same as the shareholder depositing capital? Can you tell us a little bit more about what the shareholder depositing capital is?
Shareholder depositing capital. I could take a guess at what that is. I've never heard it called that before. So when you set up a business, when you set up a corporation, you need to subscribe for shares initially. Usually we do it for $100. And so you would put $100 of your own personal money into the corporation's bank account. And then that's how you get your 100 shares, because it's the corporation's worth nothing. There's nothing in it. I think that's what they mean. I've never heard it called that.
They added a follow-up. It's in relation to the Section 85 someone else referred to.
Okay, yeah. So in the Section 85, that's like a whole nother thing that I will bore you guys for 20 minutes going through. So I'm happy to talk about that offline, but when you're doing a Section 85 roll-in, there's an exchange that has to happen because you're essentially taking value and exchanging it for value, and you're crossing it. So that's like a very complicated question that I'm happy to get into, but there would be specific nuances for what assets and stuff you're rolling in under the Section 85. So again, like my email and stuff will be at the end, I think. So I think it is. But there's this nice disclaimer first. And then let me just throw up my email here so people have it. Whoop, too many. There we go. So there's my email there at the bottom. So happy to answer any other questions about Section 85 rollovers.
Awesome. And then another question, what if you started a business in your name without applying for a sole proprietor, then open an incorporated business?
Yeah, so that happens all the time. It would depend on how far you are down the line. So if you've conducted business, you have a business number for the sole proprietorship, like it's registered, then you would just need to close it. And like, we can help you with that. A lawyer could probably help you with that. So you would just need to close the sole proprietorship and then just continue to operate out of the corp. If you really haven't done anything in it and you just kind of were selling stuff and weren't really registered or anything, I would just say, just stop selling stuff and just start selling it in the corporation.
Awesome. And then can we have a different name for the corporation and different for marketing purposes?
Yeah.
And do we have to register the marketing name anywhere?
Usually the bank would want to know, because you can't just say like, you know, you could, if you didn't have to register, you could just put checks in under any name and say that it was you. So yeah, for example, like we see that all the time with like a numbered company, is the corporate name would be 1111 Ontario Inc. But then it would be like O-A operating as, you know, Matt's paper business. And so you could have that operating name, no problem. And then there's another level of that called a nuance, which you could have multiple nuances. So you could have it be 1111 Ontario Inc. operating as Matt's paper business, or just like a nuance could be like Matt's paper, Matt PB. Like if I want to just go by like an acronym, like you could like drill it right down.
These nuances are the value of working with somebody such as yourself, who knows kind of the ins and outs.
For sure. Yeah. It seems simple until you get into a massive problem. Yeah, like anything. Yeah, I've tried to fix my own plumbing before, and it was really easy until I flooded my basement. And then it was very difficult and extremely expensive.
Yeah.
Yeah.
So there are some other questions now in the Q&A, and I think this is pretty relevant. How is federal more expensive? $200 for federal and $360 for Ontario?
I don't know where they're pulling those numbers from. So like, again, those online stuff, like I don't trust it. I don't do it. I've never used an online incorporation service. I know if you went to any law firm or MNP, incorporating federally is more expensive, because there's two jurisdictions that you're like, it's just kind of logic. Like you're setting up a business in two jurisdictions, Ontario and Canada. So there's just another return to do. So
and I believe it might have something to do with federal. There's annual filing fees that you have to pay. So I think like over the long run, it just becomes very expensive.
Yeah.
All right. And then the question after that, I have an incorporation overseas. How can I use my corporation here?
You can't. I mean, like you're getting into international tax rules, which is very, very complicated. From a banking perspective, it's a nightmare. Like going into a bank and trying to get a corporation from the UK, a bank account in Canada, or a corporation from America, a corporation from, you know, East Asia or wherever. So generally speaking, it's not easy. Again, I'd have to know the specifics about what you're trying to do, but if you're going to be living and working and conducting business in Canada, you'd want to be using a Canadian corporation.
Awesome. And then there seems to be more grants for small businesses that are registered or incorporated. Does it make sense as an individual who is in graphic design to incorporate just to be eligible for grants?
Yeah, I mean, I'd have to know what grants you're talking about. Any of the government programs that right now for COVID, they're not available to like new corporations with like no staff. So the vast majority of the COVID stuff wouldn't apply if you were just doing incorporate today. If you're talking about like more general grants, like through a school or through an organization like this one, you'd have to just weigh the pros and cons to how big a grant you're going to get. You're probably talking about $2,000 more a year in compliance costs to file the taxes, not to mention another bank account, like a bunch of other things. So if you can get $10,000 in grants by doing it, it seems to make sense to me, but I probably wouldn't do it for $700 more in grants. Yeah. Generally speaking, I always say to people, make the best decisions for your business, not like don't chase like tax savings or grants, or like just run your business and make the best business decision. And the programs and the professionals that are around you will help you to maximize what you can. But again, just generally speaking, if you act in the best interest of your business and you go and grow the business and think strategically about the business and operate the business with strong fundamentals, that's the best thing that you could do for your business. I've met a lot of people that spend more time chasing grants than doing their business. And then when the grants run out, they don't have a business. And so, that just like kind of a general piece of advice.
Great point. Just to add to that, both the Mississauga Business Entrepreneur Center and Brampton Entrepreneur Center, we run a grant program called Starter Company Plus, and it's designed for those that are thinking about starting a business or who have a business. And we do not have any restrictions on, like, your chances of getting the grant are increased because you're incorporated. It's open to everyone, small and large.
Yeah, and excellent point, Matt, about focusing on the business. I've worked with entrepreneurs who have no sales, have barely finalized their product, and they're thinking about tax savings and offshore, holding companies and where they're going to put all their hypothetical money. So I think that's a really great point. At any point of development of a business. Agreed.
Get the business running and sustainable, and then look at ways that you can look at grants later.
Yeah.
Mm-hmm. Last question, or not last question. Another question that we have is, if you are incorporated, you can write off more than if you are not incorporated, ? I'm in insurance, and this comes up sometimes with business owners.
Yeah, so I would say that, like, generally the answer would be yes. It's not that you can write off more. It's that there's more sophistication in a corporation than personally. So if you think about it from the perspective of like a bicycle versus a motorcycle, like a bicycle gets you where you want to go, and so does a motorcycle, but a motorcycle is built with a lot more complexity. And so it's not just that it's faster, it's that it's just way more complex. So if something breaks on it, you can't just like get a new tire and it's fine. And so a corporation would be like that. So the level of complexity of deductions that you can have in a corporation would just be wider ranging. So for example, like, because in a sole proprietorship, all of your expenses are going on your personal tax return, there's only like so many boxes on your personal tax return before it just gets like pretty crazy. Whereas in a company, in a corporation, the wide range of deductibility, just the net is bigger. So it's not that like you can deduct your car, more in a personal versus a corp, where you can deduct, your rent more or less. It's just that the way that the deductions are treated from a CRA perspective and just from a general business perspective, the net is just larger. So it feels more like there's more deductibility.
Thanks. Looks like there's a question that came in through the chat, and it's a great one we get asked all the time. Is it possible to incorporate first as a provincial incorporation and then down the road set it up as a federal? And how easy is it, and what would be the process?
Yeah, I mean, I haven't done personally like a ton of that. I know that it is, you can do it. I've done a lot of moving corporations within provinces. It's what's called a continuation. And so I believe that the rules are the same on that. But if that person wanted to email me, I could get them that answer. But I believe that it's the same process. Like I don't think it's very extraneous for sure.
Great, thank you. I don't see any more questions in the chat. We'll leave it open for a minute, but before we wrap up, and we'll, like I said, we'll give people a chance if they do have any additional questions, to thank you, Matt and MNP, for this great session. Lots of wonderful questions. So hopefully everyone that participated today walked away with their questions answered and some new insight into the benefits of incorporating. We do have another session in our Entrepreneurs Connect series taking place next Wednesday, October 27th at 11 a.m. It's on international expansion and what you need to know. So this session will cover an overview of accounting considerations, both financial and managerial, as well as Canadian sales tax obligations. So great session for anyone that is looking to access the global marketplace. Yeah, and there's some questions about the recording and the presentation. Yes, we will certainly follow up with everyone with a copy of the slide deck, as well as access to the recording from today's session. So that's it for me. Thank you again. I don't know, John, if you want to add anything.
No, I don't have anything else to add. Thank you, Matt. Thank you, everybody, for being here for another great session, and hopefully we'll see everybody back next week.
Perfect. Thanks, everyone.
Thanks,
Hope everyone has
Have
a great day. Thanks again, Matt.
Yeah, no problem.
Bye.
Thank you.
Take care.